Here's what's coming up on the program. The first gathering of Global Africa meets as Afreximbank holds its 30th annual general meeting in Accra, Ghana. And Kenya signs trade deal with the European Union to boost Brussels ties in Africa. And Egypt launches a new 5-year multiple entry visa for foreigners. Hello and welcome to Business Incorporated, the first edition for the week. I'm Will Ibang. Let's go straight to the markets, where we see in Africa where we begin sentiments are mostly negative for the equities we track. We see Nigeria's NGX was the lone gainer for today at intraday, 0.12% up, settling at 59,073 points there, while South Africa on the flip side was down 0.6%. We look at Egypt. At intraday, it was down more than 0.5%, and then Kenya on Friday did close in the red, 0.01%. Now, looking at the Middle East now, where we also track major equities there, mostly negative sentiment as well. Abu Dhabi was down 0.02% at intraday. Dubai also down 0.16%. But when we look at the other side, elsewhere in the region, we see the Qatari index up 0.16%, while Saudi's index, the exchange, was down also more than 0.5%. Now, Germany is on the edge of potentially closing a major deal with American semiconductor chip maker Intel. Intel is looking to set up a new chip making plant in Germany and Berlin is hoping to make it an attractive offer for them. Today, German Chancellor Olaf Scholz is set to meet with Intel CEO Pat Gelsinger. For more on this, we're joined by Deutsche Welle's Walter Imran. Walter, tell us a little about the deal Germany is hoping to secure with Intel.
Thanks for having me. Well, Germany has experienced what it's like to have a shortage of the semiconductor chips during the pandemic. This prompted them to be more proactive and get chip makers to start production on their soil. Last year, Intel announced that they had chosen the city of Magdeburg to plant its first semiconductor factory in Europe. This is a big deal. It announced that it would pour in 17 billion euros, a figure which has since risen, but it also pushed Berlin to make big concessions in the form of state subsidies. Now, here over the last few days, there have been rumblings that Berlin will increase the subsidies to upwards of 9 billion euros to mint the deal and finalize it. Chancellor Olaf Scholz is going to meet with the chief of Intel, and there could be an announcement coming out soon as this week. Now, the thing that had paused deals like this one to go through earlier was the negotiation of subsidies. But Germany is trying to be swift to secure these deals. US-based Wolfspeed, which produces silicon carbide chips used in electric cars, is also extremely interested in building a plant in Germany.
Why is it important for Germany to attract chip makers?
Well, simply put, these factories would help quench some of the need of semiconductor chips in Germany and, by extension, in Europe. Intel also announced planting a factory in neighboring Poland. So, countries are looking to strengthen themselves and their domestic production. In an attempt to fill the gaping hole left by the pandemic, the EU has passed a 43 billion chip subsidies plan to secure supplies of critical components, after the EU realized how tough shortages can be. It would also be lucrative for the chip makers to be close to many of their customers, which are part of Germany's massive auto industry, which is worth hundreds of billions of euros. And lastly, Germany would need to make itself a lucrative option for these plants, since the US started handing out more subsidies as part of its CHIPS Act.
And lastly, Walter, what's on investors' minds today?
I would assume that investors will be following the development of this deal, especially since Israel announced recently that Intel would also invest over 25 billion euros in a factory there as well. European stocks may open lower as investors watch closely the signs of improving ties between Washington and Beijing, as U.S. Secretary of State Antony Blinken wraps up his China tour. Blinken is expected to speak at a press conference today, which will be watched closely by market players and investors, especially since Chinese Premier Li Qiang is expected to reach Germany today and receive a warm welcome from Berlin. A close eye will also be kept at interest rate calls this week from different central banks.
Thank you, Wada Imran, for that update. Wada Imran, Deutsche Welle's correspondent there. Now, in the UK, government short-term borrowing cost of hit a 15-year high in a move that signals more pain for mortgage holders. Our correspondent, Juliana Lainka, joins me from London. Juliana, good afternoon. UK government short-term borrowing cost of hit a 15-year high, as I said earlier. This is bring us up to speed right now on what's going on there.
Good afternoon, Will. Well, the UK's borrowing landscape has shifted quite dramatically ever since we had Liz Truss, Rishi Sunak's predecessor's ill-fated budget. That really spooked the markets because, of course, there was billions of pounds of tax cuts, and these were unfunded, which meant that the government would have to borrow after it was already struggling to pay back so much that was removed from the coffers during the COVID-19 pandemic. We know that since then, Jeremy Hunt, the Chancellor, he's come in and tried to cool the markets, which he has done successfully, but there are so many other mitigating factors that are impacting interest rates here in the UK. One of them, of course, is stubbornly high inflation. It was at double digits for at least 6 to 7 months. It's come down to about 8.7%, and we are going to get inflation data on Wednesday, but we don't think it's going to go down any further, which means on Thursday, when the Monetary Policy Committee, led by, of course, the Bank of England Governor Andrew Bailey, meet, we're expecting them to hike interest rates even further. So it's currently at 4.5%. We're expecting them to go up to about 4.7% to bring down inflation. But alas, there are issues with that. The issues are the mortgage sector, which is in complete turmoil at the moment. Last week, we had a series of big lenders, including Halifax, Nationwide and HSBC, pull all of their mortgage products because they were not sure what was happening with interest rates. And this is a big issue for people who are on fixed, non-fixed rate mortgages. So if you're on a tracker mortgage and your rate and your monthly payment goes up and down every month, that's a huge issue. And the problem is that some people are on fixed rate terms for 2 years. About 800,000 mortgage holders have come on their fixed rate mortgage, and they are now looking at mortgage rates which could increase their monthly payment by about £700. Confused? I'm also confused.com because this is a huge issue, and there are so many negative things that are impacting mortgage rates at the moment, including, as you quite rightly started off with, the 2-year gilt yields for government bonds, as well as inflation. So it's all coming out in the wash. We have to wait and see. Andrew Bailey, the central bank governor, under increased pressure at the moment. In fact, there are some people saying that he has just got to go, that the UK central bank will way too slow, as we were with COVID lockdown, in hiking up interest rates. And if we had acted sooner, then this disaster wouldn't be happening. So yes, a huge issue with mortgages at the moment. We already have a significant cost of living crisis in the UK. And now we have beleaguered Brits set to be paying up to £700 a month just on their mortgage. And that's on top of what they're already paying, Well.
That's a lot of... That's a lot to take in, Juliana. You just
it's a lot of money. It's a lot of money.
Confusion coming out, and there you just brought it out. I think the blame game is coming out from there now. But if the blame in the blame game starts, the people, the citizens, still bear the brunt of this high cost of living, high cost of housing, energy cost. Everything is just rising, Juliana. I don't know. We'll just watch and see, as you say. But there's also
everything is rising, but wages.
But wages. well, some people saying, well, we did see some of the retail stores last week saying that they're going to up their, living allowances. Or was it 2 weeks ago, Juliana? We're seeing some of them are responding to this high cost of living and, empathizing with the people. But we also see that there's a possibility of thousands of jobs, to be created in Scotland, under a Labour proposal to create publicly owned clean energy company. Is this part of a strategy to turn the UK into a clean energy superpower?
Yeah, you could say that. I think some cynics would say this is really Sir Keir Starmer just outlining his manifesto because he's the Prime Minister in waiting, according to the polls he is anyway. The leader of the opposition Labour Party in the UK, Sir Keir Starmer, has been speaking in the Scottish capital, Edinburgh, today, and he has been outlining some of his plans for the energy sector because, of course, it's not just an economic story in this country anymore. It's now become a political story because one of the reasons why we are going through such a significant cost of living crisis is because of how much energy bills are costing at the moment. And we know that the Labour Party were really tough on the then Prime Minister Boris Johnson and the Chancellor Rishi Sunak to try and put this windfall tax in place, which has been going on, although there are so many loopholes, which means the likes of BP and Shell have been able to avoid much of those levies. And he's been saying that if the Labour Party do get in power, which according to time-wise, if a general election isn't called earlier, it wouldn't be until January 2025 anyway. But he says he will not be renewing any licences in the North Sea. And he said that he would create Britain's own energy company, which is a good story. But of course, he had to announce that because if you are not going to renew any of these licences, then tens of thousands of jobs will go. In fact, more than that, I believe the North Sea oil and gas exploration is contributing to about 200,000 jobs up and down this country, specifically about 90,000 in Scotland. So, of course, if you pull the plug on that, where are these people going to get jobs? Which is why the Labour Party spin doctor has been great in saying that this new energy company, this British-owned energy company, would create these jobs. So that is a good thing. But of course, there have been critics that have already been denouncing his statement, saying that, you know, we're going way too far too quickly, that this is going to deter investments. In fact, we've obviously been hearing over the past couple of months from businesses that are working in Scotland saying that the windfall tax alone is already deterring investment and bringing down profit. So I think Sir Keir Starmer has got a long way to go. It's good that he is setting out his manifesto because a lot of people said that he was just way too boring and too dull, that we didn't know where the Labour Party stood on very many issues. But at least with the energy sector, which is, as I said, a very hotly debated topic in the moment, he has got his position nailed. And yes, we'll just have to wait and see if he gets in power and he does this.
Too boring and too dull, Juliana. So is the market up and bubbly?
Not my words.
Is the market up and bubbly, Juliana?
Not really. The blue chip index is down at intraday. The FTSE All Shares down 0.43%. The FTSE 100 is down by 0.38%. And the FTSE 250 is down by 0.65%. In the currencies market, the British pound is currently trading down 2 against the US dollar by 0.16%, though it's trading up against the euro by 0.09%, but down on the Japanese yen by 0.07% at intraday. Will.
Thanks so much, Juliana, for always giving us those facts. Thank you so much. Now we'll take a virtual trip to Ghana, where the first gathering of Global Africa is meeting. The 30th anniversary annual meetings of Afreximbank has kicked off in Accra under the theme, Delivering the Vision, Building Prosperity for Africans. The bank says this is a fulfillment of its bold vision and its unwavering commitment to the advancement of the continent. Our correspondent, Chris Illems, getting a piece of the action there, joins me from Accra International Conference Center, Ghana. Chris, it's good to have you join us from Accra, where the event is taking place. So the Afrexim 30th Annual General Meeting has kicked off. We've mentioned that, established that. It's been labeled a historic meeting where the who is who in the world of business are meeting today. What are the expectations? What should we look out for? What's already happening at the event at the moment?
Thank you so very much.
Because we know that the who is who in the world of business are gathered for this historic meeting in Accra, Ghana.
Well, thank you so very much. Today is actually the day 2 of the event, and of course, it presents heavyweight. Well, right now it's about to rain, so let me leave the rain a little. So there are a lot of people, policy makers, government officials, businessmen and women. They are all here gathered to ensure that they are able to discuss, extensively what this annual general meeting is all about. As you rightly said at the beginning, the vision here is delivering the vision and building prosperity of Africans and the first gathering of global Africa. Why is that so? Because right here also, there are about 12 Caribbean countries also represented on this platform today. Now, the essence is, at the end of it all, Africa should be able to finance its trade and beyond that, break down barriers to trade. There are lots of barriers to trade. At the moment, though the continent accounts for about 60% of arable land, it still imports as much as $50 billion worth of food from outside of the continent. Now, this business they could also do within countries, but then there are a lot of restrictions to this and investment. And that is what this meeting is trying to ensure that are sorted out. And one thing that the meeting has also highlighted is the fact that today there is a payment system, a pan-African payment system that would help countries within Africa do businesses together and, of course, convert their currencies without necessarily going outside of the continent. So this is also helping boost trade and investment. So a lot actually happening. The need for nations to also break down restrictions. The need for regional integration has also been highlighted, because most times when the continent has any issues with the Western world, you see 55 countries are presented instead of one body or even 8 regions. So the issue of regional integration is being highlighted here. And not just that, trade restrictions must be broken if Africa must prosper. So that is what is happening so far.
As you've just given us the highlights, that is going to be bring a big boost to AfTA, that's the Africa Continental Trade Deal. But you felt the participants, the feelers you're getting. What are the sentiments towards this event? Are they bullish on this event, the participants? Chris, can you hear me?
A lot of people came here with a lot of expectations. They're very bullish. Talking about governments of different countries, we have a lot of them here. And of course, the Caribbean countries are also here. They're looking forward to, their expectations are quite high. They're looking forward to something beautiful at the end of it all. That exactly is the essence of this event. It's the 30th installment, and Afreximbank is saying, we've done a whole lot. It's high time African countries took hold of these opportunities and make the most of them. So really, everyone is bullish about what is on ground.
Okay. Thank you so much, Chris Ilens, Channels TV correspondent right there in Accra, Ghana. Thank you. Up next, a look at carbon credits and the economic potential for Africa. That conversation next. Stay tuned. This is Business Incorporated. Welcome back. Now, Africa's carbon credit market is one of the hot topics now on the continent. Last week, some 16 Saudi companies bought more than 2.2 million metric tons of carbon credits at an auction in Kenya. The event was billed as the world's largest sale of its kind. Some 70% of that credits from the auction were generated from projects in Africa. And according to the organizers, it could be the next big opportunity for Africa to fund its industrialization. We'll ask the question and we'll beg the answer from Chinan Dikwo, energy expert and vice chair, African Energy Council, who is joining me from London. Good afternoon, Chinan. It's good to have you.
Hi, Will. It's a great pleasure. We're pleasure to be here.
Chinan, what has been the cause of weaknesses? What has been could you just give us a background about this, what carbon credits are? Could you just share a bit of that?
Absolutely, Will. So, carbon markets are highly, highly regulated. Markets, what they do is they give they provide a right to companies or governments with regards to the rights to pollute, so to put greenhouse gas emissions into the atmosphere. So literally, it's almost like a permit, if you like. It's driven by demand and supply, and demand and supply ultimately means price goes up or down. But basically, yes, the commodity that's traded on those exchanges are carbon credits. So, i.e., the right for you to pollute 1 ton of CO2. That's how they work, basically. It's very typical, like most exchanges that whether it's stock exchange or something like that. But in this case, what you are trading is the right for you to emit CO2 or greenhouse gases.
So why is establishing carbon credits in Africa essential for its industrialization?
It's a very powerful one, Will, and I think it goes back to what you described there. Last week, we saw the first of its kind, the biggest one in Kenya, 2.2 million tons of CO2 traded, which attracted a lot of foreign investment into Kenya. And I think that's the key thing here. Key thing to bear in mind is happening in Kenya, meaning that projects in Kenya are green projects. They are generating zero CO2. So this could be hydro projects. This could be very efficient stoves that we use for cooking. This could be forestation projects. So, growing trees, which ultimately consume CO2 from the atmosphere. So all of these ultimately are projects that are sort of taking CO2 from the environment, basically. Now, because of that, it's very attractive to foreign companies, from developed nations who would look around and say, well, hang on, if these guys are generating carbon credits, because they're taking CO2 from the environment or mitigating CO2, then I can come in and buy that credit. So ultimately, it's a way for foreign direct investment to come into the country, like we've seen last week, but also, all around the world is very much happening. So for Africa, because in Africa, total CO2 emissions today is only about 4% of global. So it's a tiny footprint. Most of the things that we do are relatively green. It's just a way for us to organize ourselves and bring these credits together into an exchange, and that would attract foreign direct investment.
Still speaking of climate change, there are critics who have seen some criticisms that this carbon credits may not likely or may not motivate, or not sufficient enough to motivate a behavioral change in people, enough to be able to see a significant change in emissions that, for carbons in the atmosphere. What would you say to that?
That's a great question, Will. Without a doubt, you're 100% right. Carbon markets, carbon credits, carbon allowances is only one bullet in the gun, in the arsenal, if you like. It's only one lever to pull. There are several other levers that have to be pulled for you to have a behavioral change, have a cultural change. Without a doubt, so things like policy frameworks need to be there from the government. An attitudinal change from a very fundamental standpoint has to be in. But without a doubt, I'd say carbon markets are one step, and a very, very important step for Africa. The reason for that, like I keep going back to say, is Africa only contributes 4%. But if you look at our population, it's growing astronomically towards 2050. And because all of this is happening, we'd have to find a way of funding our energy access. If money comes in from these markets abroad, we can take that and invest it into clean type projects like solar projects, wind projects, if you like, and geothermal and hydro and all of this. So it's such a critical thing, but I take your point, you're right. It's not the only bullet in the arsenal to get a cultural change.
Thanks so much, Chinan Dikwal, energy expert and Vice Chair, African Energy Council, for joining us today on Business Incorporated.
Thanks for having me.
Now to other stories where Kenya and the European Union have signed a trade agreement in Nairobi, Kenya, and this marks the first major deal since 2016 with an African country where Brussels is seeking to forge closer economic ties and counter competition from China. Once ratified and entered into force, Kenya will receive duty-free and quota-free access to the EU, its biggest market, where it sends roughly 1/5 of all its exports. Now, Egypt has launched a new 5-year multiple entry visa for foreigners. The new 5-year multiple entry visa for foreigners allows their holder to stay for up to 90 days per trip in the country, according to the Interior Ministry. Now, fees for other types of visas remain unchanged, the ministry says. Now, Egypt has recently eased visa requirements for tourists from various countries as part of the country's efforts to boost tourism. Now, in March also, the government eased tourist visa requirements for visitors from China, Iran, India, Turkey, Morocco, Algeria, and Israel. And that's a wrap on Business Incorporated. Do join us tomorrow for another edition. I'm Will Ibong. Bye for now.